We do want to continue our conversation talking about the jobs report today. Let's do that with Avery Shenfeld. He's chief economist over at CIBC World Markets. Bloomberg, by the way, ranks him among the most accurate economists for his payroll forecast. Avery, good to have you back with Matt and myself. So, you know, this was initially, certainly at first glance, a pretty disappointing jobs report. I am surprised that the markets have kind of held up as strongly as they have. What's your takeaway from all the data that was released?
I think what markets are telling us is it's sort of like that Sesame Street song, one of these things just doesn't belong. We've had a number of indicators that suggest the fourth quarter isn't looking that bad, and you get a number like this that looks obviously quite lean, and the temptation is to say, well, it's an outlier, we'll make it up next month. There were some anomalies here. We surveyed people a little bit earlier in the month than normal, so some of the retail hiring before Black Friday may not have shown up in the number. That's part of the story. But I think as well you just have to smooth it out a bit. We may get a better number next month. Even with that, though, even the expectations for around 150,000 jobs a month, that's still not going to make a lot of inroads in the unemployment rate at that sort of pace.
Yeah, you know, that's a good point. I mean, what do we need to do to see the unemployment rate come down a couple of handles to an 8 or even a 7? Is that even likely in the next 2 years, say?
Well, we need to have an economy growing about twice as fast as it has been growing. So, you know, the last quarter was about 2.5%. I think the fourth quarter may be similar. If you look back after deep recessions, for example, the one in the early 1980s, economy was growing at around 4, 5%. I think we had a year of 7% growth. You take those kind of numbers and getting 250,000, 300,000 jobs a month for a while to really make inroads. So this is a half-speed expansion. It's better than nothing, but it's not good enough to get us back to full employment at this pace.
Avery, should we write it off maybe perhaps a little bit? Again, it's just 1 month worth of data. If you look at the previous month, it was revised upward, and some of it just doesn't make sense when you look at the retail data, the manufacturing, the loss of jobs there, despite other strong data that we've seen over the last few weeks for those groups. So can you maybe write it off, or do we have to wait and see what happens next month?
Yeah, I think next month will be better. And remember, if you look at the quarter as a whole, it looks like hours worked will be up roughly 2% over the prior quarter. So if you throw in some productivity growth, that's equivalent to about a 2.5% growth rate in the economy. So, you know, you do expect to see fairly tepid job growth. I think we'll do better next month, but I wouldn't expect to see that number like 200, 250 just yet.
You know, Ben Bernanke and Janet Yellen, some other members of the Fed, have been kind of pushing for fiscal stimulus out of Congress. Do you think that would make a dent in this number? Would it have to be an extremely large number?
I think fiscal stimulus is absolutely warranted, and ideally you'd want to package it in a budget bill that then also has cuts that begin sort of 3-4 years out that deal with concerns over the deficit. But I think the Fed is feeling a little bit powerless here. Quantitative easing is better than doing nothing, but I think they recognize that that's not a cure-all, and we need much faster demand growth. The Fed is buying bonds. We need someone to buy goods and services in the economy to really make a difference. And at a minimum, you certainly don't want to do a lot of fiscal tightening in 2011. So all the discussion about tax rates and relief for the unemployed, I think all of that, we want to lean on the side of keeping stimulus in place a while longer.
Hey, Avery, got about 30 seconds left here. So if we cut to the chase, bottom line, what's holding back job growth at this point? What would it be?
Simply not enough demand. Not enough demand for goods and services, not enough spending power in the economy, and we need something to fill in that gap.
All right, we're going to leave it on that note. Hey, Avery, thank you so much. Have a great weekend.